So, hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you are, whatever you may be doing. This 50 pips rocking and rolling, 17th of Feb 2019. No trade calls, recommendations, or response for their own stuff here for educational purpose only. So, long weekend. So, U.S. markets closed tomorrow, Monday, President's Day holiday. So, again, keep that in mind. Let's see what we got shaping up for this week. Week should be fairly interesting. We have a lot of things to keep in mind. We've got Walmart reporting ahead of the open on Tuesday. On Wednesday, we've got the FOMC minutes. Thursday, we've got all those European PMIs. And between that Thursday and Friday, we're going to have basically BOC, RBA, and ECB on deck speaking. So it should be interesting, right? Now, the most interesting thing to keep in mind as we go into the week is I still think we've got an awful lot of event risk out of Trump, China, Mar-a-Lago, whatever you want to call it. But again, we've got an awful lot of event risk there. We still have to keep an eye on what's going on. We've had this talk or resumption of possibility of these auto tariffs being put back on. Trump's been talking about that. So again, that's clearly, if that's the case, that's going to continue to weigh on the euro. I still think overall, we still, our base case hasn't changed, right? Business cycle peaked. Companies have been lackluster reports on the earnings side. Their earning growth is slowing. We'll see a lot of people, a lot of companies laying off workers, et cetera, et cetera. We think this is as good as it gets for this business cycle. So we'll have to see how that plays out, despite the fact that we're still seeing markets ramping, especially the Russell with a real crazy move, but again, with no pullback at all. We'll have to see how that shapes up. And again, keep in mind that the market, all things being equal, is still very, very long US dollars. Now, we're at a particularly key inflection point, and it doesn't mean we're going to break straight away here, but we're at a key inflection point across the board, as we'll see, because we've got gold pressing those highs, crude pressing those highs, euro pressing the lows, markets pressing at highs, right? So there are a lot of things that are on the verge of breaking out, and we'll have to see are they going to break out or not, and that's going to be the key question. I mean, this very messy chart that you see here is our focus. And again, a lot of people have been talking about this rotation out of tech into financials or into other things. And this is what we've been talking about, but I just wanted to try and visually try to show it a little bit better. You see what we've been talking about, with all the recent posts on the blog too. This is on top, we've got FANG, right? And look at what's happening on FANG essentially, right? So we had the bottom like we had on these are all the indices, right? We've got the YM, Russell, ES, and NASDAQ, and we started to get this ramp back higher, right? So we had the ramp. And then look what's been happening essentially now, right? FANG is going nowhere, right? With all those companies that have traditionally led with strength, and you still see, we've been squeezing higher, squeezing higher, squeezing higher, squeezing higher. So we think that this FANG is the most interesting chart out there, and where there are a lot of interesting opportunities that we've talked about and we will continue to talk about. But I just wanted to highlight that because I think even though the chart is messy, it's an interesting visual representation of where we're at, right? So going back into the major markets as we usually like to look at and discuss on Sundays let's look at, so DXY, what's going on the DXY. And right here, as we've been discussing, it's fairly, it's at a fairly key point, but we have to wait for a breakout, right? It's very hard you can make a case for this going either way, right? You can make a case for it going either way. And as we've said, both the longs we feel are getting very excited here, and the same way the shorts were very excited here. But as we said, expect to see a lot of choppiness, and unless we get a real resolution, this is just velocity of move inside range. So I'm not going to go through all our fundamental reasons or our technical reasons on this chart, but essentially nothing much has happened, right? We had a nice move lower, and now you've had a nice move higher, but essentially we're still stuck here, right? We can't break out. And likely we'll have to see this. We'll have to see how these tariff wars resolve. I think a big driver could be if they, if we see auto tariffs or not. But right now, much ado about nothing. Our base case still remains that we expect to see it stay inside this range, and we prefer the outlook to the downside. And even if you look at short-term action, right, still there being plenty of opportunities to play the downside again here with repeated moves back down. So again, there's very little to add. That's where we are. In terms of crude, right here, we were talking about the 55 and the 50 range, right? And our base case here was that on this failure at the 55, we'd see this come right back into the 50 to tag the opposite side of the range. Now it came back, it clipped those 42s, and then it just couldn't get any traction. This 50 DMA here protected, and it looks like now it's going right back to the 100. So we didn't have a position on here, haven't been trading this actively, but right now this is very, very key, because the big question is this especially a little bit of Friday fake out action, right? And is that dollar strength going to come back in, and is this going to move lower, or is this really breaking out? Because right now, as you can see, if we can get traction above here, there's not an awful lot all the way back into that 100, which, if you look to the left, it ties in with this area. But essentially, there's no reason why this couldn't make a big run for the 60 and the 200 if it catches a lot of people off guard here. So we'll have to see, but clearly here you have to entertain the possibility that what's trying to play out is something like this for a move back to tag that 200. No position here, not really trading this, but this is a key one, right, as it's trying to break out. Now, the other one is GC. Again, trying to break out, holding bids. Something which we've discussed a lot this week is keep an eye on the metals. Now, no secret, we're bullish on gold. We expect this to come back to the 1350s. And what you've seen, repeatedly throughout the whole week, especially if you're looking at shorter term action, you had a lot of times, a lot of days where basically you started to see a lot of action, or especially on the dollar, right? When the dollar was strengthening, but the gold and silver were still holding a bid. Now, you got a lot of smackdown attempts, but irrespective of what was happening, right, on the dollar, you saw last week, right, we've and the past, we've seen this, especially on gold, and this bid coming in, even though you got the smackdowns, it kept on holding bids. Silver caught up, right? So I think that's something you really have to keep an eye out for. Again, we wouldn't be surprised a smackdown on the equities, but the thinking is, it seems like everybody is waiting for one last puke, aggressive puke on the commodities to get back long. And the question I'd like to throw out is, what happens if we ain't going to get that last puke to get back long? What if the long is already in play, as we've been suspecting, right? That's something to keep in the back of your mind. But again, if you're looking at it intraday this week, what I would suggest again is take a look at that and look when the dollar is strengthening, right? Is it strengthening against those metals too? Or are those metals continuing to hold some kind of a bid tone? I think that's the key tell. That's been the key tell also in terms of ultimately what we think will play out as in a risk-off environment, right? So again, still bid, and clearly if we trade back below the 1300 for some reason, a lot of people who are chasing this breakout are going to be wrong, and we would not be surprised to see a very quick move back down into the 1250. But right now, as long as those bids keep on appearing on any shallow dip ahead of that 1300, path of least resistance is still 1350, right? On the ZBs, as we've been discussing for quite some time now, we've been extremely uber bearish on those ZBs, if you remember, all the way. It caught a lot of heat here also on some of those trades when it was breaking above the 170 for the move back into the bottom end of this multi-year channel here. And right now, to us, it really looks like it's still in play. I mean, it doesn't mean it can't do this and then break lower again, but right here, right now, it looks like this held beautifully. It looks like the rotation back above this chop zone is holding, and the bids are still supporting. And as long as this supports, that's what we would be looking at, at the very least back into the 155s. And if you go back onto a daily, you can see, right, that even though it dipped back down, this move is looking fairly constructive, right? And even though it's stalling, it's still catching a bid. So especially intraday, if it can't close back below this area, you can call it 145 into the 145.30. Well, 146 as being a pivotal level. It really looks like it wants to tag here. And if it gets some upside traction, again, with a lot of people betting on these still going down, you could get a nasty surprise back into the 155. So we clearly think here the surprise is still for an ugly move back to the upside. And if you look at ES, here, as we said, above the 2700, there's a chance to try and get short on those failures here. Clearly, no traction, still worth risking a little bit of capital on this opportunity here in case it turned. It clearly didn't work, and now there's not much until the 2800s, right? So right now, 2800, 2700, big kind of twilight zone territory, and we'll have to see how we trade around that zone. But if we keep on seeing this this kind of pattern, what we've seen is that the market is essentially dead all day. It tries to sell off into that 10 a.m., 11 a.m. window, and then bam, once we hit that 11 a.m., it just starts to ramp like crazy until lunchtime. Then it stalls a little bit. It tries to give bears false feeling that we might turn a little bit, and then when we get into the last hour, we rip, and the last we rip back up. As long as that continues, there's no reason why this can't just continue to be a straight line all the way back towards those highs. But remember, as we've said repeatedly, these straight line moves don't end in a pretty fashion, right? The market has a way of having to move in a healthy manner. And again, these low liquidity or these ramps that are just pushed by volume coming in at specific times, it just looks like institutional order flow, right? But these unhealthy one-directional moves, whether they're up or down, they tend to unwind. Now, clearly, if you look at the NQ, it's stalling a little bit more, and because of the discussion we had on the FANG earlier on, we would really keep a very close eye here. How are we going to trade this week, right? Are we going to continue to see rotation out of tech into the others, or is this tech, which has been propping everything up and leading everything higher, right? Is this going to actually pull the market back down? So as usual, if you want to look at two names, you look at Amazon and Boeing, right? So this is going to be interesting, but any hold below the 7,000 this week, we'll be looking to get aggressively short. And the other one, which we still very much like and we're very focused on, is the Russell, right? Sorry, this is a little bit of a messy chart because I haven't updated it in a while, but essentially here, be very, very interested to see how the Russell trades here. And this has been a wacko move. What is it, like 25% or something from those lows, pretty much straight lined, about 26. And this is the one we're the most interested in trying to get back short for an aggressive move lower, or at least an aggressive correction of this complete rip here. Now, what else is interesting? Again, we've gone through all those FANG names, all those stocks, so there's not that much to keep an eye out for. If you want to look at the in currency land in a little bit more detail, again, our base case is that the DXY is going to stall a little bit. And what's interesting there, right, is the action we've seen, as we mentioned before, not only in the metals holding bid, right, but especially Euro at the end of the week, right? with everybody looking for this to die, especially accelerating on that auto tariff talk. But here, essentially, we've just gone straight line. So here, there's a lot of profit taking that needs to be done if this catches a little bit of a bid. So our base case still here in terms of broader picture is that we haven't gone anywhere broadly speaking, right? Whether you're looking at this big range or this big range, we're still very much sideways, right? Now, even though this is still clearly bearish, the way we look at markets, if you draw something like this and you draw something like this, just eyeballing it, right? We still think that as long as this holds, this is the play, and this is a far nicer asymmetric risk, presents a far nicer asymmetric risk reward profile than trying to get short into a zone that is essentially held for a long time. Okay, and same thing is irrespective of what's been happening on the equities, etc. You see the smackdown on yen and the fact that the yen is not really holding a strong bid here. Now you can notice from the updates we're actually holding swing shorts in this again, and we're looking for this to try and close below the 110 to try and get some traction and reopen our base case scenario for that move back into the 100 sometime this year. But also if you look at something like Swissy, this is a very interesting action because we had the ramp to open up last week. And what is very interesting is everybody tried to chase the move up. The market caught everybody off guard and started to sell off. Then everybody wanted to get short because they saw the wick. And then the market came back up trying to ruin that party too. But what's extremely interesting is that after you had this move lower and the subsequent ramp, you'd think it would be extremely easy to try and clip these stops, right? And to try and gun this higher area. So the fact that we rotated all the way back up after we came back down, right? And that level still aggressively defended, and the way we close back on the daily, again, you see that you're dollar's not attracting new buyers at highs here. So this to us would indicate also that market will try and clear the downside after not having been able to take out the upside. So we think this is the path of least resistance now. So again, there are a lot of things trying to, falling into piece, going into that discussion of some dollar weakness coming back into the picture. So that's pretty much where we stand. Let's see what we get. Let's see what happens. Remember, U.S. markets are closed tomorrow, so a little bit of a slow start to the week, but we'll be back in full force as of Tuesday. Wishing everybody an awesome week ahead. Take care, guys. Bye-bye.